Dannet, Kapil, it's great to be with you here today. Thank you. Maybe you could just take a few minutes and explain to us exactly what is the investment strategy at Incofin, and then how do you both relate to that strategy?
Sure. So let me start by telling you a little bit about Incofin. Incofin Investment Management is an emerging markets focused impact investor. So we only invest in emerging markets and we only make impact investments. We look at three sectors: there's financial inclusion, agri-food, and drinking water. And we do private equity, private debt, and in many of the markets where we work, just money is not enough. So we also provide technical assistance. We have a strong history of 30 years, and through those 30 years, we have learned a lot. And by that, we have been able to create an investment and impact strategy that works for all kinds of investors around the world that invest in our funds. My role, I'm a director here at Incofin, where I do both private equity on the transaction side, but I also work on taking our funds from zero to one, which means conceptualizing and building new initiatives, and then finding the right set of partners who can come in and support us launch those initiatives, both through investments, but also through other services.
Yeah.
Super.
For me, my name is Danette, and I've been with Incofin for 10 years. And similar to many of the other colleagues at Incofin, I grew with Incofin. I started out as an investment manager in the fields in East Asia, sourcing the deals, trying to find the companies that fit with our impact mandates, conducting the credit and the ESG and impact assessments of these companies, and in informing the IC of all of the decisions they need to make in order to approve the transactions. I was doing that for 4 years, and now 4 years ago, I moved to the risk, ESG, and impact team, where I am the manager, and I'm responsible for making sure that our impact and ESG strategies make sense, that it's maintained, that it's then operationalized in our tools, in our methodologies, and that's all of this information is then diffused and transmitted across the first line and business lines from all functions, because at Incofin, everybody wears the impact hat. It's not just one department, one function. So that's what my role is.
Fantastic. So, Kapil, could you take a minute and help us understand what is it that allows Incofin to stand out amongst the crowd? Because you do operate in a space that is getting quite populated.
The three things that I think differentiate us from many of the other impact investors in the market. So first is geographic diversification, but sector specialization. So we invest in 50 plus countries around the world. But that said, our focus areas remain quite specific: essential services. There's financial inclusion, agri-food, drinking water. Second is we have a very strong global coverage, but local anchorage. That means that we're headquartered in Belgium, and many of our teams here are responsible for providing an institutional oversight on matters that include things like risk, like legal, like getting investors on board. But then we have local investment teams with offices in Bogota, Nairobi, Chennai, and Delhi, which gives us an unparalleled access to many of the deals that are happening in local markets. So that's the second thing. And third is we straddle effortlessly across a range of instruments. And I think this is a point we'll discuss eventually in the conversation. But we use blended finance solutions. We run strategies that are catalytic by design or impact first by design. And then we also have commercial strategies by design.
Super. So, could you guys take a few minutes and just tell us how you think about having local presence as a competitive advantage when you're making investments and when you're offering solutions to your LPs?
Absolutely. So the way we think about Incofin is that Incofin is a platform where you really have investment teams on one side who are sourcing local investments. And I'll give you an example. I mean, we have an India-focused private equity fund called India Progress Fund. And if you are looking to make deals in a market that's as large as India and as competitive as India, you need local presence. You need people that understand that context. Because a small example would be a customer acquisition cost, for instance, in a market like the US, is very different from a customer acquisition cost in India. And that deep understanding of context is extremely important when you're looking to make investments. That said, when I said Incofin is a platform, that means that many of our other services that include LP engagement, for example, or looking at what's happening in the market and designing strategies for fund, or impact measurement, where Dannet works, are benchmarked across some of the best institutions in the world. And again, that helps us to make sure that we are applying the best standards of both impact measurement, but also services to our investors to the best possible extent.
Thank you, Kapil. Danette, can we jump back to a comment you made earlier about impact being integrated throughout the entire investment process and throughout the entire firm? Can you elaborate on that and help us understand what does that mean in practice?
Yes. Yes. So I think the first thing need to know is that any team member who joins Incofin, the first thing they receive is an impact orientation. It's a standard, it's a requirement. You come into Incofin and you leave Incofin with an understanding of what impact is and what we're trying to achieve. It's built into our culture. So regardless of what function, regardless of your seniority or what position you are, everybody receives an impact onboarding. And so in that understanding, every team member needs to then take that impact onboarding, understanding what it is we're all trying to achieve together, and operationalize that in the specific function and specialization that they are in, whether it's finance, treasury, investor solution, to the investment
Hmm.
team, to the second line team. Everyone has a specific role and responsibility linked to that. So obviously the investment team is the primary driver of this because they are the client facing from the portfolio level, and they receive a lot of training on how to identify the right clients that meet with our impact mandates and our criterias, how to do the assessments, but even more so on how to engage with the clients to build awareness and to also understand how to take the client on the journey of impact, because all of the different companies are at different stages, and part of our work is not just, the point is not just to make finance, right? It's to go beyond the investment and to take all of our portfolio companies on this journey with us as well, so that there can be transformation, there can be change in the way that they do business, the way they view their clients, the products and services they offer. So it is a process that requires a lot of engagement, and this is also where, linked to your previous question on the advantage of having a local presence, we need to have a local team that understands that cultural sensitivity and can engage with the portfolio companies in a way that can be understood and accepted.
So, Danette, could we explore that a little further? And could you help us understand how you all think about measurement and metrics for impact as you're thinking about making portfolio decisions and maybe as you're thinking about making decisions for the firm itself?
Yeah. Yes. So for us, firstly, measurement is a non-negotiable element of our business.
It's music to
And
my
not only
ears.
Yes, not only because we need to be accountable to our investors, but we also need to be accountable to our portfolio companies where we're requesting for information and change, but also for our employees who are here because they want to make an impact. And I think all of us want to know at the end of the day if we're making a difference at all. And so we need measurement. And at Incofin, this measurement happens from the very beginning, from the origination, actually from the fund development stage already, where there's clear criterias on what the asset owners want to achieve. So this then becomes an eligibility criteria, and this is then what the investment managers and the investment team uses to go and source and find clients that meet with these impact criteria. So they need to have certain processes in place. They need to be focusing on certain clienteles, certain segments in the population. They need to be offering certain types of products and services. So this starts sets kind of the framework for identifying the right companies. And then we have measurement tools to then assess whether the practices, the policies, the procedures are in line with the mandate that's been set up according to the fund's documentation. The team is trained on this. They do the assessments. It's centralized in our online platforms so that, everyone from first line, second line, senior management can see the data and can process the data and can consolidate and report. Then the investment team, they do this assessment, and this is then vetted as well by the risk team as a second line to make sure that the assessments on the impact metrics are correct in line with policy. And only through that process then is it presented to the investment committee, who would get a full package side by side: the credit risk, the financial risk, the ESG and impact risks. And all of this is then taken into consideration when an investment committee member makes a decision. It's never a standalone decision of one or the other. It needs to be presented together. And following that, after a transaction is dispersed, there's a lot of efforts that happen after that on the monitoring to make sure that, what we promise, what the client promise is on track, and that we are moving closer and closer to the objective of that fund.
The other interesting thing with Incofin is that we also have the IIMM practice very much inside of our goals, both at a firm level and fund level, and that determines in many ways the financial incentive that our people make. So at a firm level, every year we do an annual goal setting, and there are broadly 3 buckets in which we have goals, and one of the buckets always is impact. So 40% of all of our goals are actually on impact, and depending on how you achieve those goals, you may or may not receive your year-end bonus. So that's one. At a fund level also, we've started to do that. So I'll give you an example. We have a water access acceleration fund, and there are 2 parts to the financial carry or carried interest there. One is, of course, upwards of there's a benchmark or a hurdle rate, and anything that the fund achieves on top has a carried interest element. But then second is there's also an impact performance incentive or an impact carry. And the overall objective of the fund is to provide 20 billion liters of safe and affordable drinking water to 30 million people. And depending on how much we're able to achieve, there's an impact incentive there. So that's also another way to look at how we integrate IMM across all of our work.
That's really unique. The way you've connected team performance to portfolio performance to impact metrics. Have you ever had a situation where you turned down a deal because it didn't meet your impact criteria? And then have you ever what do you do when the impact disappoints you as the deal's progressing?
Indeed, there's a lot of deals that maybe even at the risk team, we don't know gets filtered out already very early on in the process by the investment team. So they would be the ones that would know how many deals are actually being filtered out at the very beginning already. But there are deals that have come through the process, which we then either the risk team says, no, we don't believe that this is meeting the right impact objectives, or that the process and procedures are not aligned with the best practices that we are promoting. And then there's deals that go to the IC, and the IC also takes into view and would reject those on an impact perspective. There's been cases where we've worked with clients for a long time, and because we have not seen progress on things such as client protection, we let go of that relationship. And so it's not something that we are scared of doing. We will always prioritize the important commitment of making sure that our investments have impact. So
that's true commitment there. So as you know, we talk to a lot of funds, and you guys really do stand out as marrying the impact, the strategy, and then ultimately the financial returns. That's what I see. How do you guys, though, think about the relationship between impact and financial return? What's going on in your mind and your strategy?
For us, financial and impact returns are not mutually exclusive. We believe that it needs to be together. It's essential that it is together. It's the way we do business. And we are aware that we work in very risky markets. our clients are risky, and we believe that our investors should be rewarded for the risk that they're taking. Now, we're not only worried about our investors and their financial returns, but from a system perspective, financial returns needs to be felt and received also by the portfolio companies, by their employees, by their end clients, the micro entrepreneurs, everyone that is putting effort to contribute to a social or environmental change should be compensated for the additional
Yes.
work and effort that they're putting into it. So for us, financial returns is a critical part to incentivize and to keep the system going and sustainable. At the end of the day, we want our impact to outlast us, outlast Incofin. And
Yes.
without financial returns, we don't think that that would happen.
And that, of course, is the beauty of capitalism, right? If you get it right, everybody wins. So I think I know the answer to this because you guys are so clear about your strategy. But I do want to hear from you what you would say to the folks in the world today, many of them in the United States, that capital should only be used for one thing, and that's to generate a profit or a return. What do you say to those folks?
Mm.
Yeah. I'm going to make a very rational argument, and then I'll let Dannet come in with her magic on this. But the reality is, any business generates externalities. Right? Some of those externalities are positive, some of those externalities are negative, and many businesses just go scot free after creating negative externalities because they're not the ones who are paying for it, right?
Hmm.
So if you look at financial returns, yes, a business exists to make financial returns. That's why we are in the business of impact investing and we're not in the business of grant making. But that said, those externalities need to be priced in. So if you look at, say, a business that is harming the environment, for example, that business is creating negative externalities. Now, if you price that in, you will see that the returns actually fall down. So the reality is that absolute metric of making a return actually doesn't exist because
Hmm.
our the capital asset pricing model, as we call it, the CAPM, just doesn't take into account many of these sort of more foundational, fundamental elements of financial or social performance into account when it comes to pricing the assets.
Thank you. That's a fantastic answer. And certainly, as an economist, it resonates with me entirely. So, can we pivot the conversation a little bit into the work we did together? And I think that's an important set of issues. So let me just start with the easy ones. How did you come to work with us at the Impact Evaluation Lab, and what do you think was the highlight?
Should I take the first one, Daneth, and you want to take the second
Yes,
one?
I think the connection came through you.
Yes.
Kapil.
Yeah, so it's great, Rob, working with you. A lot of things happen over coffee, and it was great to see you at the Sorensen Impact Summit where we met for the first time.
Hmm.
And one thing led to the other, and we came to know the fantastic work that you're doing, and we thought it was a win-win. It was great for us to go through that program, both to understand how we stand or how we compare to an objective benchmark that you're setting with a third-party evaluator almost of sorts, but also to be able to contribute to the sector to see if we can help you obtain some of the data points that we have to ensure that the tool itself strengthens. So very happy to have worked with you.
Thank you, Kapil. The feeling is most certainly mutual. Danette, can we pivot to you for a second? And we did obviously spend a lot of time on your impact framework, your metrics, and the way you go about implementing all that. What do you think are in the marketplace broadly today? What do you think are the deficiencies in IMM, and what do you think needs to happen to address those deficiencies?
So I guess the deficiency needs to be also taken into consideration on who it is aimed at, right? I think on one, are there deficiencies for the asset owners, for making decisions on whether a fund or a fund manager is performing in terms of impact. Yes, there are some deficiencies, and I think that is the
Hmm.
important work that you guys are doing with the IAS tool, to simplify and to synthesize all of the existing standards and principles and disclosures that are out there. I think the industry has made great strides in coming together to develop all of that important work, but I could imagine from an investor or asset owner's perspective that, wow, it's overwhelming.
Yeah.
There's a lot of information, there's a lot of standards, we understand the importance of it, but what does it all mean, and how do I compare one fund to another? And this is where I see the value added of the AIS tool is that basically the fact that you are able to conceptualize but put a number into the assessment or put a scale to it in a way that then an asset owner can choose and benchmark is a, a great contribution, right? If the question is aimed at, at the fund manager level, if there's still deficiencies in measurement, then I would also say yes. We've also made a lot of great strides, and everybody's working hard to collect the right information, not only for the regulators, but to be accountable for the missions we want. And there's a lot of efforts to define what indicators, how to measure things, but we still face the core problem that hasn't been cracked, and that is how to efficiently collect credible data from the end beneficiary to attribute any of our impact to change, right? And that's probably where we're moving towards gradually. And so something we're keeping an eye out, we're excited, we're
Hmm.
also continuously exploring, learning from others and engaging the industry with. But yes, so there, in our view, there are two levels of the impact measurement that needs to be accounted for.
Thank you. That's all really great to hear. Really. Um, as you think about uh, the partnership that we had together when we were working together, and then you think about uh, the commercial realities of your business, have you been able to take the work we did together and leverage it as you're pursuing new LPs, and sort of making a presence felt in the marketplace?
Absolutely. One of the things we do at Incofin is we have an annual impact report that comes out at the firm level, and also at the fund level. When we have our quarterly or annual reports, we
Hmm.
mention impact alongside financial returns. So the work that you have done certainly feeds into, I would say, both sides of report, and also in multiple conversations we're having with LPs, where if an LP wants to see how the fund is performing, it's easy to track financial performance against benchmarks.
Hmm.
It's not so easy to track performance on impact. So that way, it's a great tool to have in our library to use while I'm pitching to we're
Hmm.
having conversations with LPs.
Fantastic. Glad to hear that, and always glad to give you more support if you need it. Danette, as you think about issues around financial inclusion in really some of the most vulnerable parts of the world, how do you think about the intersection of lots of different issues that affect the people you're trying to serve? Whether it's socioeconomic issues, whether it's climate issues, how do you think about that, and how do you position yourselves to be able to address it?
Yes. So indeed, one of the emerging challenges are emerging markets are portfolio companies, and the vulnerable populations that we are working with are facing is climate change. And, you know, we are focused on promoting the building of resilience of our portfolio and our investments. So what we're trying to do with our funds, one of our funds is very much focused on climate change, is to build the resilience against some of the social economic impacts that come from climate change. And so there's many levels of this. On one level with our financial institutions, what we're working with them on is, how to um, continue providing financial inclusion to risky clients who are impacted by climate risk. Like, it's very easy for a financial institution to be like, oh, that small farmer, no, they're going to face a drought this year. I'm not going to lend to them. I
Yeah.
need to keep my portfolio
Yeah.
quality clean, and I'm out. And this is basically unraveling all of the efforts that financial
Mm.
inclusion has been working for the past 3 decades. So what we want to do here is then to help with the financial institutions to put in place new ways of assessing risks and to mitigating risks so that they can continue the work of financial inclusion to bring those who don't have access into the system. And at the same time, also creating opportunities and thinking around new financial solutions that could help build the resilience of the clients, whether it's products to adapt or purchase seeds that are more climate resistant, um, by using upgrading their homes to reduce the risk of flooding. So all of these solutions, there's a market opportunity for it as well.
Hmm.
So that's on the climate lens that we're looking at.
Thank you, Danette. So, guys, you have developed a really compelling strategy that crosses over lots of areas and also delivers a pretty solid return. If there are people who are interested, how can they get in touch with you and find out more?
Thanks, Rob. We're very active on social media. So LinkedIn is a great source to engage with us. I'm personally always available, so you can drop me a line. My email ID is on the website. So if you're looking to engage, just drop me a line and let's get a coffee, virtual or real. If you're in Belgium, happy to take you for a nice Belgian coffee. But yeah, I mean, we're always open for partnerships of all kinds, both on sort of if you're looking to invest money with us, but even outside of that, if you have um, ideas or ways in which you think we can work with you, like Rob, we have done here.
Mhm.
Um, Very open. It's the DNA of Incofin, which is we're a bunch of entrepreneurs who are looking to build things, and we can't build things alone. So we need you to come in.
Fantastic. Thank you. We've got just a little bit of time left here. I always like to have an unannounced little speed round. So, guys, a little bit of fun here. Can you tell me what's your favorite music?
Does anything compare to Bollywood?
Yeah. I don't have a particularly favorite one. I listen to all types of music.
Oh, come on, Danette. There's got to be one.
I mean, I guess I would, I do like pop music. So,
Great. That's great.
yeah.
What's the favorite kind of food you have that you would never cook at home?
Uh,
Mexican. Oh my God.
I would never
Yeah.
cook sushi at home because I'm scared of getting sick.
That's a good one. And what is your favorite kind of food that you do cook at home?
Love Italian. It's easy to put together, so
Hmm.
simple, high quality ingredients, and very good.
Yeah.
I like to cook Indian food, actually. I love the spices and the mix and playing with those flavors.
Fantastic. I love it all. Last question: if you had one thing to say about impact investing to people who are unaware of what it is, what would it be?
Make money while doing good.
Great.
And big changes can come from small efforts.
Love it. Love it. Thank you, guys. Well, guys, Danette, Kapil, it's been really wonderful working with you. It's been great spending some more time and chatting with you today. Thank you very much. I'm sure we'll see each other down the road. Take care.